So we begin with single entry, and that's also what we call accounting from incomplete records. Okay, I think before we begin, I think I have a small little question to you. You know, there are two systems of accounting in India. One is what we call double entry bookkeeping, and the other is what we call single entry. But let me tell you, before I tell you anything about single entry is not in practical use these days. I think one of the biggest organizations, if you've heard of MTNL, that's Mahanagar Telephone Nigam Limited, you know, that was one of the organizations, a government organization, which was using single entry. But I think now they have also switched on to a double entry bookkeeping. You know, this was a technique which was generally used by smaller organizations, and that would be small traders, your sole proprietorships, your partnership concerns. They would generally follow a single entry system. But I think my question goes to you. Can you tell me, what do you understand by single entry? I think we've heard about double entry. I want to get your views. What do you understand by single entry? Let's have your views first of all on this. Whatever input you can give me, whatever comes to your mind when you think of single entry. I'm waiting for your views on this, friends. Whatever input you can provide me. Nothing so far? I thought you'll have something to say. Accounting from incomplete records, what we call single entry. Okay, I think I like this. What my friends Vishakhapatnam says, it is not a double entry. I like that. You know, it's something like this. Somebody asked me, where is your house? And I said, opposite the temple. And then he said, where is the temple? And I said, opposite my house. And then it says, where are the two? I say, opposite to each other. So I think single entry, of course, is not double entry. And I think Hyderabad says only one column, either the debit side or the credit side is used. That means instead of passing a double entry, debits and credits, let's consider only one. And I think Commodore says it ignores a part of the transactions. In the sense we record only one part of the transaction and we ignore the other part, is it? Okay, and I think friends, Vishakhapatnam got something more to say. Only personal and nominal accounts are maintained. Okay, I think we're getting some good input now. Let me, I think, first of all come to double entry bookkeeping. You know, when we follow the system of double entry bookkeeping, we all know in case of double entry bookkeeping, we make a journal, we post it to the ledger, we make a trial balance, and that becomes the basis of making final accounts. That's what the entire chain, as far as double entry bookkeeping is concerned. You journalize a transaction, you post it to the ledger, you make a trial balance on the basis of the ledger balances, and that becomes the basis of making the final accounts. But when we say a single entry system, well, I think what my friends Vishakhapatnam said is not fully true. I think the little I think mistake which you've made on this. When you make journal and when you make the ledgers, we know that there are a total of three categories of accounts. One is what we call the personal accounts, one is what we call the real accounts, and one is what we call the nominal accounts. Now what we do in case of single entry system, we maintain the personal accounts and we maintain the real accounts. We don't prepare any nominal accounts. That means any incomes and expenses accounts are not maintained. Now my question to you is very straightforward. Can I say if I don't prepare all the ledgers, that means I maintain only personal accounts, I maintain only real accounts, and I don't keep a track of the nominal accounts? Do you think I will be able to generate a trial balance? What do you say? I've made only certain accounts. I don't make all the accounts. Will it be possible that out of the ledger balances, can you generate a trial balance? And I think the answer would be simply a no. What do you say? And I think friends Visakhapatnam agree with me. That answer is of course a big no. You cannot generate a trial balance. Because if you don't maintain all the ledger accounts, I think it's impossible that you generate a trial balance. Then if you don't have a trial balance, the question arises, how do I get the profits? Because the ultimate objective is to get the profits of the concern. You may maintain the records on a double entry or on a single entry, but the objective is getting the profits. We'll still manage to get the profits. There are two techniques of calculating the profit. I'll throw a little light on this a little later, but I think let me first of all mention, under single entry system, let's put a note, only personal and real accounts are maintained, only personal and real accounts are maintained under this system. Nominal accounts are not prepared. Nominal accounts are not prepared. So we maintain only the personal accounts, only the real accounts, like for example debtors, creditors, bill receivable, bills payable, a stock register, that would be something what you call a real account, but no incomes and expenses accounts are prepared, which implies trial balance cannot be made, which implies that we cannot generate a trial balance because we are going to maintain ledger balances only for personal and real, and for this reason we cannot get a trial balance. But still, the objective is getting the profits of the concern. Okay, so I think as I said, there are two methods of calculating a profit under this. Let me name the methods as well. Under single entry system, we can calculate the profit using what we call statement of affairs method, and the other is what we call the final accounts method, or what we call the conversion method. I know you might be saying final accounts method, but you don't have a trial balance. How are you going to make the final accounts? Well, I think everything is possible. As they say, impossible also says I am possible. There is nothing like impossible. So even without the trial balance, we are still going to generate the final accounts of the concern. Okay, so I think let's add on something more. So let's put a note on this. To determine the profits, under single entry, there are two methods. To determine the profits under single entry, there are two methods. Number one, I think friends Bhalla have some problem with the network. So to determine the profits under single entry, there are two methods. One is what we call the statement of affairs method. Well, statement of affairs is nothing but it's a balance sheet. If you have to commonly call a statement of affairs, it is nothing but we say it's a balance sheet. So we have a statement of affairs method. and we have got the final accounts method. Final accounts method, or what we call the conversion method. Well, of course, the most popular in the exams is the final accounts method. Generally, in the examination, we are asked questions on the final accounts method, but of course, we'll do both of them. We'll do the statement of affairs as well as the final accounts method. Okay, so with this background, I think we've understood first of all what is single entry, and we've understood the two methods, and I think now we'll start each method one by one. Now, I'm going to ask you certain questions. Believe me, if you can answer my questions, the statement of affairs method is done. So I think let me begin with my questions to you. Let us say I started a business on the 1st of January 2010 with a capital of 1 lakh rupees. By the end of the year, that is December 2010, my capital is, let's say, to the extent of 1,50,000. A very straightforward question. This is my opening capital and that is my closing capital. Can you tell me what does the difference between the two represent? I have not introduced any further capital. Number one, I have not withdrawn any capital during the year. Keeping the factors into mind, I have not withdrawn any capital during the year. I have not introduced any further capital during the year. Can you tell me what does this difference of 50,000 represent? I think friends Vishakhapatnam says due to profit, and I think friends Vijayawada also says this is attributable to the profits of the concern. I like this. Any more inputs on this, friends? Coimbatore also says profit. Trivandrum, T-Nagar also says profits. Wonderful, friends. I love this. Brilliant. Yes, of course, you are right. I can say the profits are to the extent of 50,000. Okay, I think a little technical question to you. Can I call the capital as the net assets at the beginning of the year? Can I call the closing capital as the net assets at the end of the year? You know, this is representing like the opening net assets, because capital plus liability is equal to asset from the accounting equation. So can I say capital is nothing but it is the net assets at the beginning and net assets at the end of the year? Am I thinking right, friends? What do you say? You know, if I were to call the capital at the beginning, it's net assets at the start, and this is net assets at the end of the year. And I think yes, T-Nagar agreed with me, and Vishakhapatnam says it can even be interest on capital if it is 50% per annum. I think that's a good thinking indeed. Well, I think if you're saying that this increase of 50,000 rupees is on account of the interest which is paid by the business to the owner, I think that's not possible, because I think the firm needs to earn something to give interest. Vijayawada says no. So you mean to say the capital cannot be called as the net assets? I think, friends, we can, because if you recall the accounting equation, capital plus liability is equal to assets. That's what my accounting equation represents. And I think if we take this on the other side, assets minus liability, then I think we can say this is equal to net assets. And I think that's what, my friends, I think Vijayawada's question is. I think now you would agree with me that capital is nothing but the net assets. I said it is net assets. That means assets less liabilities at the beginning as well as at the end of the year. I hope, my friends, I think Vijayawada agrees with me. Am I right, friends? So capital is the net assets at the beginning and net assets at the end. So we are comparing the change in the net assets to be the profit of the organization. And believe me, there are two ways of calculating a profit of a concern. Either you compare the change in the net assets, That's what you call a balance sheet approach. I repeat, the ways of calculating profit is you compare the change in the net assets, that is what you call the profit of the organization, or you can compare the income and expense and get the profits. The final accounts method is based on the second approach, that is the income statement approach. You compare the income and expense and you get the profits. But as far as the statement of affairs method is concerned, it is on a balance sheet approach where the change in the net assets is called profit. Right friends, I think let me ask you a few more questions. Let us say the capital at the beginning of the year is 1 lakh. The capital at the end of the year is 1,50,000. And I also give you the information that during the year I have introduced a further capital, let's say to the extent of 20,000. Can you give me how much is the profit? There is no capital withdrawn. I'm just giving you the status. This is the opening capital, 150 is the closing capital, and there is a further capital of 20. Can you give me how much is the profit? And I think friends, Visakhapatnam give me 30,000. I like this. And I think Trivandrum also gives me 30,000. Lovely. I think I need some more inputs on this. Ananagar also gives me 30,000. I like this. Coimbatore also gives me 30,000. Beautiful. Can you give me a working note, friends? Can you give me how do you arrive at this 30,000 rupees? Your answer is right. I don't deny this. But can you give me a working? And I think Vijayawada also gives me 30,000. I'm impressed. But can you give me a working? How did you exactly get this 30,000 rupees? Can you give me a little working on the same? Okay, I think let's do one thing. Let me give you the working on this. Can I say this 1,50,000 is after introducing 20,000? So I think it's better to consider the closing capital 130. So what I'm doing, this 150 is after considering 20. So we can say without the further capital, this is supposed to be 1,30,000. So if I compare opening and closing, now this is on the same base without further capital. This is also without further capital, standing on the same base. So we can say the profit is to the extent of 30,000. Absolutely. And I think you've also given me a similar calculations, but I thought I'll do it this way. Okay, another last question. And believe me, I think you've done a good job. My statement of affairs method is practically done. Okay, let's put across another question. The opening capital is 1 lakh. The closing capital is 150. During the year, there is a further capital introduced, which is 20,000. And there is a capital withdrawn, let's say to the extent of 10,000. Can you give me how much is the profit? I've introduced 20,000 during the year. I've withdrawn 10,000 rupees during the year. I need the profits of the concern at the end of the year. And I think Visakhapatnam gives me 40,000 is the profit. Very good friends. Trivandrum, Madurai also give me 40,000. Brilliant. I think that's absolutely correct. So I think the chapter is done. I'm serious. The statement of affairs method is actually done. That's what we are going to do in a statement of affairs method.